Welcome to This Week in Money. I'm Jim Goddard. Today, veteran trader Victor Adair runs down the major markets. He says they've bounced back since a big drop from the start of the Iran war, but still haven't recovered to their record highs. Victor takes a close look at crude, gold, silver, and the currency markets. Publisher of the Schachter.Energy report, Josef Schachter, joins us from Calgary to talk about everything energy and how the war in Iran is impacting both conventional energy and things like EVs and lithium-ion batteries. He believes it will take months, if not years, to repair all the damage to the Middle East energy infrastructure. He's also worried about the private debt market in the U.S. leading us to another major recession like 2008. Author of the book, The Money Bubble, John Rubino, talks about how much damage to the world's economy has been done by the war in Iran. He says with crude prices skyrocketing, more people will be looking at solar energy and electric vehicles. He believes there could be a big push against AI data centers due to their massive energy use. Author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash, Hilliard MacBeth, weighs in on the Iran war and also takes a look at Canada's struggling condo market in big cities like Vancouver and Toronto. We'll talk to Victor Adair right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Victor Adair, recently retired from nearly 50 years of being in the brokerage business in BC, but still very active in the markets. His website, victoradair.ca. Welcome back to This Week in Money.
Thanks, Jim.
Victor, what happened on the stock markets this week?
Well, interestingly enough, the stock markets, let's do it this way. The major equity indices in the United States were trading around all-time highs in January, maybe early February. The S&P fell about 10% from those highs to the lows late in March, and subsequently have bounced back. Now, the S&P hasn't got all the way back to where it was before the war started on the 2nd of March, but the Dow Jones Transports did, the NASDAQ did, and the Russell, the small cap index, have all rallied back above where they were when the war started on the 2nd of March. Now, to me, that's very interesting how this has happened, and because actually the rally started last week when the market seemed to be at a bleak low, and it's like the stock market may have decided that they had already discounted like the worst that could happen from the war over in Iran. So the market rallied this week, carrying on from where the rally that began last week, and we've got the negotiations, let's call it. I don't think we can call it peace talks over the weekend here, and we'll see where we open on Monday.
What's going on with crude?
Crude, interestingly enough, if I'm going to look at the Brent contract. We typically talk about WTI, West Texas Intermediate, but Brent is a blend that's more international and more pertains to the a benchmark for the oil that comes out of the Middle East. It was around a $60 market in early January. It hit a high of about $120 when things were at their worst here a few days ago, and from that 120 level, it's backed off to about $94, $95. Interestingly enough, the stock market has bounced back more up than the crude oil market has fallen from the highs. So what I'm seeing here is the crude oil market is physical oil, and and I think the market is looking to see whether or not oil actually starts coming out of Hormuz. And by the way, there is a lot floating on the water in there and storage in there, but so far the market's sort of from Missouri. They'll believe it when they see it.
What's happening with gold and silver?
The gold market hit, call it a secondary high right as the war opened on the 2nd of March, and then surprised, I think, a lot of people by taking a pretty good tumble. I think at one point we were down well over $1,000 from the highs that had been made at the end of January. It seems as though, obviously, there was some selling, but we've had Turkey come out and central bank explain to the world that they were selling gold, trying to support their currency. There are certainly ideas going around that some of the countries in the Persian Gulf who are so dependent on the cash income they get from selling crude, and suddenly they weren't getting that they were selling some gold because they needed to pay their expenses. Whatever, the gold market did take a pretty good drop from the highs. It's bounced back, but we're still about $800 below the all-time highs we made at the end of January.
Mm-hmm. On silver?
Silver, the same kind of pattern, just as you can imagine, much more dramatic. Silver really swings for the fences up and down, so the same kind of a pattern as gold.
Currencies, the U.S. and Canadian dollars.
Yeah, in the currency markets, the U.S. dollar index, and that's heavily weighted to the European currencies, had made a 4-year low. I think that was in early February or late February, around at the time that Donald Trump had said he wasn't too concerned about it. And the market was really positioned for the U.S. dollar to go lower. And then as tensions started to arise between particularly Israel and Iran, and then also between the United States and Iran, the market was, the dollar was rallying and then really jumped higher as we had the war start. Now, a good part of that is positioning. The market was heavily short the dollar, and all of a sudden the dollar is going up because of the war, and people that were short had to cover. So we had the dollar in the initial phases, let's call it the first 3 weeks anyway, of the war. The U.S. dollar was rising. Virtually all of the currencies were trending lower. And since the news of peace talks, negotiations, whatever, the U.S. dollar has weakened. Now, the Canadian, I called it, for a couple of days there, I called it the petro currency. When the war first started, the Canadian dollar was bid. I think part of that was people were of the view that Canada, being a net energy exporter, was going to benefit, where other currencies that were net importers of oil were going to suffer. But it didn't take long for the Canada kind of join the herd, as it were, and weaken against the U.S. dollar. I've said many times, and I've traded the Canadian dollar really for 50 years, that a lot of the movement in the relationship between the Canadian dollar and the U.S. dollar has nothing to do specifically with Canada. It's just what the U.S. dollar is doing against the rest of the herd, as it were. Canada kind of follows the euro or the British pound or Japanese around, like like a younger brother or something like that. Some of the things I have seen here, the software index within the NASDAQ is still struggling. Some of the other aspects of NASDAQ are doing quite well. The Canadian stock market made an all-time high on the first day of the war, go back to March the 2nd, and then traded off from there. It's rallied back here at the other markets the last week or so, but still maybe 4 or 5% off the all-time highs it made at the beginning of the month. Right now, Jimmy, the market was, let's say, volatility certainly has dampened down from what it was throughout most of March. The market's kind of sitting on their hands. I think people maybe have got some positions that they're comfortable with going into the weekend. I mean, who knows what will happen in Islamabad. But I think one of the things that happened that I thought was very interesting, and this is going to be an opinion, but I think the Iranians decided to engage with the Americans with these negotiations because they were told to by Xi Jinping. The Chinese get more than half of their imported crude oil come from the Persian Gulf, and if the war had started there, or the escalation anyway, that Trump was talking about, I'm sure there would have been massive retaliation from the Iranians against their neighbors, so it would be entirely possible from China's view that they wouldn't be getting any oil out of the Middle East. So I think China definitely stepped up, and they're the reason that the Americans and the Iranians are sitting down. And there's going to be some pretty big egos sitting at that table in Islamabad starting I guess today, Saturday. But we'll see where it goes. That's going to be the acid test for the market here, along with whether or not there's actually physical barrels coming out of Hormuz.
Victor, thank you so much for being on This Week in Money.
It's always a pleasure, Jimmy. Good to talk to you.
My guest has been Victor Adair, his website, Victor.Adair.ca. Coming up, Josef Schachter, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Josef Schachter, founder of the Schachter.Energy Report online at Schachter.EnergyReport.ca. He's speaking to us from Calgary. Welcome back to This Week in Money.
Oh, Jim, it's always a pleasure to be with you.
With the volatility in the oil and gas markets, is it a good time for our listeners to subscribe to Eye on Energy and the Schachter.Energy Report?
Well, with all the things going on in energy, if it's not now, then when?
Yeah.
The big thing is there's so much going on the macro side. The price of oil moves around like a yo-yo. Like today was down $1.87 for WTI to $96. Brent is trading at $94.53, so a discount because there's not a lot of Brent crude, and everybody's rushing to buy WTI to get it. There's a lot of talk that jet fuel may run out in 3 or 4 weeks, and refiners are trying to figure out how they're going to get more, which means they need a certain grade of oil to create more jet fuel, more diesel. There's going to be allocations at some point. I think that, this weekend in Pakistan, Islamabad is going to be very critical. Right now, Iran looks like they've won because they do control the Straits of Hormuz. They're not, the traffic is only for the ship that they're putting crude in to go to China, or friends of theirs like Pakistan or Turkey are getting oil out. But the other countries, like the ones from that are selling from the western part of the Persian Gulf, number one, they're not comfortable paying, $2 million for if you have a 2 million barrel a day crude carrier, paying $2 million in either Bitcoin or yuan or gold, doesn't sit with them. So all those ships are still there, and the straits haven't been opened. So tomorrow's discussion, which starts, has got two things with it. Iran is saying that there should be no fighting in Lebanon, and we got the straits and pay us. And the Americans are going to have to get through that, and then go through all the main issues like the nuclear weapon issue, terrorism issue, the attacking of neighbors. So I think that, the assumption the market's making that there will be a deal, I think may be wrong. I'm skeptical about it. And I think that, next week, there's going to be a lot of gyration in the market when noise comes out, and, Trump's going to get on Truth Social and, or tweet, X and do his thing. And, if there is no deal by the end of next week, then they're going to go and take Carg Island, and the price of oil is going to go higher. So anytime you see cheap gas at the pump, take advantage of it. I think that if you remember, we were bullish before March 1st, and we were looking for $70 average when the price of oil was in the low 60s. And our assumption was that in Q2 it would be very clear that OPEC cannot raise any production, and people had talked about a 4 million barrel a day overhang, which we didn't believe was accurate at all. And then we thought by Q4 we would be $80 a barrel because we assumed that global inventories would be shrinking and be very noticeable. Well, now with the war, we're sitting here where we are. I think an 85, 95 price range after the war is more likely. And if we're over $80 for this year, the energy stocks, which the oily names have done very well, but they're still cheap. But the natural gas stocks, a lot of the companies there have 15 to 25% liquids, and the market's ignoring the liquids portion, and those stocks are tremendously cheap. And I was a buyer of some of them this week because I just thought there were bargains there. And, so to me, there's great opportunity in the sector. And the way I approach it is, if you're going to be paying more at the pump, if you're going to be paying more for your power bill at home, why not own some energy stocks that are going to benefit from higher commodity prices and are cheap, so that you have almost like a personal hedge against your personal expenses.
Following the proposed ceasefire of the Iran war, how did the prices of oil and natural gas end the week?
Well, we're looking at right now. Number one, the ceasefire. I'm not sure if it's real. There's still been attacks. If you listen to the news, Lebanon, of course, is still nasty. There's been some attacks against Saudi Arabia, but we're sitting with prices. I mentioned, 95, 94 is the last number I've got for WTI. That's up on the week, and if we don't have a deal next week, or the noise coming out is not good, I think we go back over 100, and the market doesn't like when they see $100 WTI, so the market will weaken. And the high of 119 that we were at, if we go into May and there's no peace treaty, and the Straits of Hormuz is still, blocked, then Asia and Europe are going to be very tight with inventories. Right now, some products in Asia are trading at the equivalent of $200 a barrel for WTI. So we're already starting to see problems. Jet fuel is going to be one. Diesel will be another. Oil products, that people need are going to be a problem. So I think that, this whole thing, the longer it lasts, the messier it is, the higher the prices. But when there is a deal, and again, I think the Americans are going to take Carg Island if there's no deal, so that they can control the exports of Iran. Maybe that gets them to the table. I don't know, what they're going to do on the nuclear, because it's buried underground. So they've got to get in there and take out the blockages, find it. Or that's going to need Iran support. You and I have talked before that the conventional military, the Artesh in Iran, has not been heard from. Would they get involved at some point if the IRGC is degraded enough so that they can take over the country and then, have free and fair elections at some point? There's so many wild cards here, and I think we're probably not going to see the end of this for a couple more months, if things don't go well this weekend.
What's the difference between West Texas Intermediate oil and Brent oil?
Well, West Texas is the U.S. price for light oil. Brent is, of course, the UK and Norway Brent fields, and because UK, of course, has cut back on the on drilling and activity in the North Sea, there's less of it. So historically, Brent, because it was so much closer to the European continent, you had less transportation costs. You always had like a $5 spread, Brent trading over WTI. Now that there's a shortage of Brent and there is adequate supplies of WTI now trades at a premium. And again, the longer this war lasts, the longer I think we see that the WTI premium.
Are the oil and gas markets predicting the Iran war will end?
I think that's, the fact that, the price of oil went down today and, the meetings are tomorrow. The fact that, the rhetoric from Trump that the 10-point proposal looks good, which, from what I've seen, I'm not sure it is good, because it has everything to do with Iran getting sanctions off, Iran getting paid to, for the Straits of Hormuz. Iran getting guarantees of no more attacks, and yet there's nothing about the getting rid of their nuclear weapons, nothing about them giving up terrorism. So, is this another one of, Trump's negotiating things of saying, oh, it looks good, and then when they don't come to the table with the right deal, then he can blame it on them and said, hey, they came with some proposals, and in the end they reneged. And if that's the case, that's not good.
When the Iran war started, crude oil spiked higher, but not natural gas. Any thoughts on why?
Well, natural gas did spike for the prices in Europe because they got a lot of their natural gas, their LNG from Qatar and the Middle East. So you saw there were days when the LNG facilities were attacked that you saw TTF, which is the European price, go up sharply, $50-$60 an MCF. Now it's like 17, but you compare that to the U.S. price, which is sub $3 U.S. I'll just get the number right now. Natural gas today was $2.65 in the U.S. So there's a big gap, and prices in Asia are about mid-teens, $14, $15.
If the Iran war is over, what could it mean for oil and gas stocks?
Well, I think, if we, depending upon where the price of oil, ends. So if the price of oil ends at, let's say $100, when they know for sure that shipping is going to move through the Straits of Hormuz, and the insurance is available, we'll probably see the price of oil come down to 80, 85. That would then bring the stocks down, and I think we'll get another buy signal then. I'm watching the S&P Energy Bullish Percentage Index. It was prior to the war up in the 90s. It's now in the low 30s, so people are getting more pessimistic. And if that gets down below 10%, which we write about in our reports, then we would then have another buy signal. And to me, some of the oil names are very cheap, but any of the natural gas companies that have a liquids portion, those are extremely cheap in my book, and that's where the bargains are. And as I mentioned, earlier, I was a buyer this week of some of, one of the companies that we own in our portfolio. We added to that position.
Do ceasefires usually take a bit of time to implement?
Oh, for darn sure. You don't, first thing, you've got to get the American military, you've got to get the Israeli military, you've got to get the Hezbollah, you've got to get the Houthis, you've got to get the Iranian IRGC. There's just, everybody's got to be playing ball, and that's not the easiest thing. So I think, a ceasefire will take time to implement. And again, it's going to, the big part is, the Americans can probably, do the ceasefire pretty quickly. Israel may be just behind them, but it's the IRGC. You don't know who's in charge. There's so many different commanders. Some are more militant than others. And just like the day of the announcement of the ceasefire was to go into play, you saw, the IRGC, some of the groups in the IRGC continued their attacks.
Do you think the people of Iran will rise up against what's left of the IRGC?
Oh, I think we'd all want that to happen, but the IRGC is showing that they still have weaponry. They're getting a lot from China. They're able to build drones and small factories. If you look at the country, the western part of Iran has been attacked aggressively by the U.S. and Israel. The eastern part of Iran has not. And a lot of manufacturing of drones is also occurring there. We still see ballistic missiles being fired. So even though the United States and Israel have degraded the capability of Iran, they sure haven't done enough. So I think the IRGC needs to be degraded much more, and then we'll see if the Artesh, which is the conventional military, which never got the support because the IRGC was there to protect the mullahs and the supreme leader, and they got all of the best weapons and they were in charge of the ballistic missiles, the Navy, the Air Force, the Army, which is the Artesh, was not given the weaponry. They were there just to handle the borders if there was any problem, with any of the minority, groups that live there. You've got, Balochistan, you've got Kurds, you've got a number of other ethnic groups in the country, and I think the Artesh's job was to keep them down.
Any idea on the energy infrastructure that's been destroyed in the war?
The more I read, the more alarming it is. Some of them are saying that some of these natural gas facilities could take 4 or 5 years. The pipeline attacks could take, 6 months. Some of these petrochemical plants could take years. So if the war goes back on again and more facilities are destroyed by the U.S. and Israel in Iran, Iran's going to go after the Saudi refinery and petrochemical business. They're going to go and maybe hit Qatar and maybe knock off some more of their natural gas LNG capacity. If we go back to a fighting, this thing just gets worse and worse, because if you degrade, the capability to move the oil when there is peace, or to move product, that just means longer and longer, and that means higher prices for longer too.
Will the rebuilding of the Middle East be bullish for commodities and jobs?
Oh, I think the answer is yes, because, while they're rebuilding the Middle East, there's going to be shortages of the commodities, which needs to be allocated to supply and demand. If the demand is there and the supply is less, the price has to go up to the point where the demand shrinks. So that's going to be one. Jobs, of course, it's going to be, to rebuild everything. The big builders, the Schlumberger, Baker Hughes, Halliburton's, all the ones that do all the biggest construction in energy, they're going to all be finding that they've got a lot of business, and they're going to be sending people in. And of course, they're going to have hell of big margins on that stuff. So, it's going to be very expensive. And fortunately, the countries are very rich, but so they'll be taking away from their sovereign wealth funds to pay for it.
Is the disruption in oil and gas markets bullish for electric vehicles and the lithium-ion batteries that power them?
Well, when you go to the pump and fill up now, you're probably talking $120 to fill your gas tank, and when you hear from people who have EVs that it's $10 or $20, then that starts to wake you up to consider it. The problem is the price and also the range of the batteries in cold weather. In Alberta, I've got friends who have EVs. They won't take it on the highway between Edmonton and Calgary because they may run out because the power, just dissipates because of the cold weather. So if you're in warm climates like where you are in BC or in areas that are in the southern part of the United States or Europe where you don't have as much snow and cold weather and charging stations everywhere, it probably makes sense. But for me and my wife, I don't see us ever owning one unless we have one highway car and one city car, and the city car is an EV. But we haven't discussed that enough to say that we want to do that.
Automakers are coming out with more and more electric vehicle models, and more EVs are being sold. Could this cause a slowing demand for oil?
At some point in the OECD countries, it will, but that's going to be more Europe. I don't think in North America, with people so used to driving, gasoline and diesel-fueled cars, that it's going to happen. I'm also not sure that the EV market is growing in North America, which it's not the biggest consuming market. China is, and China, the EVs are growing in usage there, and less hybrids and less gasoline and diesel. So in China, definitely you're seeing a demand switch to EVs. But in North America, I don't think the data is sufficient enough to say that that's happening. And when you talk to people about buying cars, number one, they're reticent because they're 6 figures for a truck or for a decent car. The prices have gotten up, and our prices are also trading at very high levels. So when you have a squeeze in your family budget from housing and food costs and power, you're not going to be interested in buying a new car. And I think that's why we're seeing car sales slowing down.
President Trump keeps talking about lower energy prices in America. Is there a path to make that happen?
Well, it was stupid when he said that you're going to have $50 price for WTI and you're going to be paying way less at the pump. Yeah, we did get that when, for a while, in the beginning, late 2020, 2025. Remember, we got down to the 50s. At the end of the year, we got down to the mid-50s. But the industry can't grow and can't bring on more supplies because they need $75 to $85 to justify the full economics. So now that we're sitting, as I said, mid-90s, the economics are there. The problem is it takes time for the industry to respond. So they might start, drilling more in the summer of 2026. But a lot of them still have debt and they want to pay down debt. A lot of them are being pressured by shareholders for shareholder returns, i.e. normal course issuer bids, buy back the stock, or pay me a dividend. And for me as an investor, I like to buy energy stocks that are paying me a dividend more than I can get for, interest in the bank, and I want the upside from the oil and gas sector. So, people want dividend yields, and there's a lot of yields out there in the 5 to 7% range still. Those were 8 to 10 before, in April of 2025. But there's still some great yields out there, and that's what we write about in our SCR report. And our clients respond to it because they want to know how did the companies do, Q4 of 25 and year end 25. How safe is the dividend? And we write about that, and people will respond. And we've had a very good year with subscriber growth, and people, of course, have made a lot of money. Since the buy signal we gave in April of 2025, a lot of stocks have doubled and a few have tripled. So, and the conservative names, if they gave you an 8 or 10% dividend, they went up 50%. Unbelievable rates of return.
Would lowering the price of energy lower the price or the rate of price inflation and stimulate the economy?
You could argue that. The problem is, why would the price of energy go up given the fact that the industry needs higher prices to bring on more? If demand increases, then they can't fill it if the price of oil is $65 because they're not going to spend it. And so I think that we're in an environment now because of the war and people now realizing security of supply matters. Not having problems with transportation, i.e. these choke points. They're going to be wanting to buy oil from safe places, and that's where Canada's opportunity is. International investors are looking more at Canada. They're a lot happier with Carney versus Trudeau, but now Carney has to do something and show the world that, yes, we will have high environmental standards, but we will be allowing more LNG plants on the West Coast. We will find ways to transport more oil. So there's lots of opportunity. It's just a question of execution now. And, there's elections on Sunday, I believe. The Liberals may end up with a majority government at that point. And now let's see what they can do.
Going forward, could we see different oil prices depending on whether you're in North America, Europe, Asia, or elsewhere?
Yeah, we're seeing more in natural gas where the prices are different simply because, North America is self-sufficient and Europe and Asia are not. Oil prices will matter based on the transportation and based on, the type of fuel they use and what the products they use it for. So, but the differences will not be a lot. Like WTI to Brent, today is like $3-4 spread. That's been $5. As I mentioned, $95.70 for WTI, $94.44. So, we're talking a $3 plus spread, with, Brent, versus, cheaper than WTI. But I think that, $5 spread one way or the other is what we'll be looking at going forward.
Which countries are served by oil, natural gas, and other supplies that travel through the Strait of Hormuz?
Well, it's not us in Canada or the States. It's China's a big user, India's a big user, South Korea, Japan, all of those Asian countries, and also in Europe. Rotterdam is a big hub for the oil and gas industry, and they import from the Middle East. So, the UK right now, they've not been supportive of the North Sea, and so they're a big importer. And so, the demand, 20 million barrels a day was going through the Straits of Hormuz. You could say, 2.5 million is going through by Iran selling to China. Then there's probably 1 million or 2 more that they let through, which are, their friends, Pakistan, Turkey, etc. Then you have Saudi Arabia, which is moving oil from the East Coast to the West Coast. But there's worries, what about the Houthis? Are they going to strike and make it difficult to move shipping out of the Red Sea? So, there are still lots of problems. But I would say Asia and Europe are the ones that are hurting. North America is sitting in a very pretty position.
If the Iran war is pretty much over, are ships likely to be moving again?
Number one, I don't believe the Iran war is over until we get answers on the nuclear and the terrorism and the attacking of their neighbors. I don't believe we will agree that the war is over. Then it's the insurance companies. Will they provide insurance for moving the ships? And, even if there's ceasefire, is successful next week, a lot of ships that are in the Persian Gulf will load up and get out of there, but the owners won't let it go, won't let those ships go back in if they're not sure, if the ceasefire is going to hold after the 2 weeks. So I think that, this is the Iran war was a game changer. The fact that Iran is trying to take control of the Straits of Hormuz and get paid for it, I think all of that is a game changer and means higher energy prices. Look what's happened to beef. Look what's happened, to so many other product areas. Look at uranium, precious metals. We've seen Commodity Board wake up. The Commodity Board was quiet for so long, and then it's just taken off. And I think we're just beginning to see the beginning of it, just like we saw in the 70s. We had cheap product of everything in, 72 to 74, and then 75, 76 on, prices escalated. I think that's the case. The big issue is going to be, does commodity inflation go into wage inflation? And if it goes into wage inflation, then that's when the central banks have a problem. So, the question is, what do you believe your inflation is? Do you believe the government at 3%? Or do you think your personal inflation is 6 to 8%? Think about your housing, your property taxes, your insurance, all the rest of the things you spend your money on. And a lot of people say, when I talk to them, they say, what's this inflation number? I say, well, it's a government way that they can calculate it, and any item that goes up, they take out so that the numbers look good. And they always change the methodology. If you took the methodology of 20 years ago, inflation would be in the 5-6% now.
There's talk of a $2 million toll on ships going through the Strait of Hormuz. Would $20 million on an oil tanker work out to $1 a barrel? And would these tolls give a sales advantage to U.S. oil?
Definitely the Americans would have a benefit, and that's why we see, WTI trade above Brent. But the commentary you're seeing today is that, yes, if you have a 2 million barrel tanker, you're going to pay $2 million U.S. You're not going to pay it in U.S. currency. You're going to pay it in Bitcoin, you're going to pay it in yuan, or you're going to pay it in gold. So but the ships that are being allowed through now, like the Iranian ships delivering crude to China, or the Turkish, I don't think they're collecting much money from them. I think probably none. But if they ever do start moving oil from the western part of the Persian Gulf, that's where the prices get paid. And Saudi Arabia has said that's a non-starter for them.
What's the latest on rig data?
Oh, it came out today, and I knew you were going to ask, so I pulled it out for you. The U.S. rig count is down, and so from a year ago. So if Trump wants his $50 oil, it's not happening in terms of activity. The rig count last week fell 3 to 545 versus 583, down 6.5%. Where it's up is on the natural gas side, 127 rigs versus 105, up 20.9. And again, that's the LNG market. There's more LNG facilities coming on stream. They need the gas. But the oil, we're down 61 rigs, so it's 411 now versus 472 in the U.S., down 12.9. In Canada, the gas numbers are up because of LNG Canada, 52 rigs versus 47. But remember, we're heading into spring break, so the overall rig count is down 7 to 135 versus 138 a year ago. But oil numbers are down 5, 83 versus 91. So we're down 8.8% on the rig count for Canada on the oil side. So, the basic issue is we do have these high prices. No company is willing to bet, no energy company is willing to stay, this is a long-term price that we can make decisions on. Everybody's waiting to see what happens. When is this darn thing over? And where are prices afterwards when they settle down? And the big question then is, can they make a living, producing oil at whatever that price is? And do they want to continue to pay down debt? Do they want to continue with shareholder returns? Or is it attractive enough to drill? And the only way the price is going to be attractive enough to drill is it's got to be higher than it was pre-war when it was in the 60s.
You refer to an energy super cycle. Which energy commodities do you expect to take part in this super cycle?
Well, the thing is, it's everything. It's oil, it's natural gas, it's uranium, all the things that we need. And also in the EV world, you need copper, you need lithium for batteries. And so I think people need to look at investing both in the energy industry of today, but the energy industry of tomorrow, which is, all the things we're going to need for that energy industry of tomorrow. And I think that's something that I think is going to be very important.
President Trump's been talking about the Dow hitting 100,000 before the end of his term. How could that number be reached?
Well, again, inflation. If you look at it from, the economy would have to grow massively. Corporate profitability would have to expand rapidly. And I don't buy that for a minute. He wants $50 oil. He's not going to get that. And I don't think he's going to, if you want it by the end of his term, which is 3 years, maybe the Dow's 70,000 if everything works out. But if inflation picks up and the central banks have to raise interest rates, maybe it's the same price we're at today.
Is private debt in trouble to the point they won't let investors take their money out?
That's been happening in the U.S. These private debt funds are limiting redemptions. They have in some of them clauses for 5% redemptions per quarter. Some of them are getting 20 and 25% requests for redemptions. So it's a big mess. And I think that private debt is like the problem that we had with the mortgage and the subprime lending that was occurring in 2008. You're seeing defaults picking up, junk bond yields are spreading higher than where they were, and you're seeing other kinds of debt instruments having problems, and people who have loans, be it mortgages or car loans, the amount of delinquencies is picking up. So we could be heading into another 2008, and that would be disappointing, but that's a possibility.
Does it look like President Trump is going to stop America from being the policeman for the world to close bases and bring troops home?
Well, he's really annoyed about Europe, and so he may want to bring back some of the troops in Europe because Germany, is not willing to play ball. A lot of countries are saying you can't use our airspace, like Spain, UK, Italy, and Germany, Poland to some extent. And so, the United States may, under Trump, they're not going to get out of NATO because that requires congressional approval. But I definitely think that they may say to the NATO countries and also to some of the Asian countries, why should we have troops in Japan? Why should we have troops in South Korea? I know they pay for part of it, But if they're not paying for all of it, and again, should they be, paying for all of it, and should the Americans be defending it when those economies are strong enough to fund their own defenses?
President Trump has referred to Trudeau and now Carney as the future governor of Canada. If Canada became the 51st state, would it be good for the oil and gas industry?
Number one, I don't think it would be good for the oil and gas industry. Nobody here wants to be the 51st state. Yes, we do have a number of people, on the streets, on McLeod Trail, where they want, to be independent. But I don't think it's a big enough portion of the population for it to be realistic in a vote. I think, the fact that, King Charles is going to Washington, I think he'll explain to Trump how Canadian, policy works with him being the King of Canada, in a monarchy situation. And then if he likes the king, he may say, "Oh, I'll forget about Canada. I'll still go after Greenland." And you hear him talking more about Greenland than Canada right now.
Have environmentalists caused oil and gas projects to be curtailed all over the world, possibly causing more damage to supply than the Iran war?
I think you might have argued that point as being a problem a few years ago. But I think that even environmentalists, they fly their private jets, or they drive their cars. They have multiple houses, multiple cars. So I think that they may still get the sway with the media, but I think they realize that if the environmental stewardship is there, they're not going to give up their use of fossil fuels, and until they give it up, Senator Kerry, a total hypocrite, and all the others environmentalists that you see, Suzuki and others, I think they're all a bunch of phonies. What they say and what they do, totally different.
Could the war in Iran be the beginning of the end of OPEC?
The funny thing is, I think it'll strengthen OPEC, because once Iran gets slapped down, I think that, the rest of OPEC, because of the demand for oil is going to pick up, they're going to have to be able to prove that they have security of supply. And if they do, and if they are tougher on their members, saying, stop this, stop that, like in Libya, civil war or whatever, we also need to spend more money and bring on more production because the world needs it. And really, do we really want the United States and Canada to bring on and take that market share? Well, we better be disciplined if we want the market share for ourselves.
With regards to regulations, what is the best province and the worst province in Canada for oil and gas exploration and production?
I put Alberta and Saskatchewan in the best, and I put Quebec in the last column.
Why is Quebec so against a pipeline to bring Alberta and Saskatchewan energy to the east?
Because they're raping Labrador from their hydro side. And the hydro exports are a big part of the revenue stream in Quebec. And so they can get away with it. But the problem is, I think they're realizing that they need, and they're short of. There's no more rivers to take over in Labrador, and Labrador and Newfoundland have said no more cheap energy and stop ripping us off. And you saw the deal that was done, a year or two ago, that any new the projects they're going to get a better rate of return, but they're still being exploited. I think that Quebec is realizing that they're going to have to import, from the United States natural gas. They already import oil from the Middle East. They have no problem with tankers going up the St. Lawrence, but the environmentalists have a problem with tankers on the West Coast. Like, total hypocrisy.
Do you have a bullish case and a bearish case for crude?
The bullish case is the war is over. Economies grow. The price of oil rises because you need higher prices to justify exploration, and we have a lengthy bull cycle. The bearish case is if the price of oil goes so high that it pushes us into a recession or a depression, and demand falls off a cliff like it did during COVID. That's the most bearish case. I don't see that right now, but it is a possibility.
Where can our listeners follow you and subscribe to the Schachter.Energy Report and Eye on Energy?
Yeah, our Schachter.Energy Report is where we cover, we do some macro there and charts, but we mainly cover 32 companies, the oil and gas, some royalty income, some energy service stocks. So that's where you go for the company-specific ideas. And Eye on Energy is a product that we do through Substack, and it's included in the SER subscriptions. So people can just go to our website, www.Schachter, Schachter, energyreport.ca, and they can subscribe. We have both an annual and a quarterly subscription rate. One good idea justifies the subscription, and we've had a pretty good track record, as you know, both on the macro and on the company side. And so I think people, if they've been spending a lot of money and investing in crypto and then in gold, and they're just getting into energy, I think we provide a very good independent product for individual investors. That's not, brokerage related and, corporate finance controlled, or inputted. Ours is totally, independent. And when I think a stock is overvalued, I will use the sell word, which you won't get out of brokerage firms.
Joseph, thank you so much for being on This Week in Money.
My pleasure as always. Take good care.
My guest has been Josef Schachter, founder of the Schachter.Energy Report online at Schachter.Energyreport.ca. He was speaking to us from Calgary. Coming up, John Rubino, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is John Rubino, author of several books on the economy, including The Money Bubble. He founded the website DollarCollapse.com. You can find him on Substack at Rubino.Substack.com. And we're most happy to have you back here on This Week in Money.
Hey, Jim. It's good to talk to you again.
How's your Substack doing, and where can our listeners subscribe to it?
Doing really well. Turns out there's quite a market for actionable advice for dealing with gigantic financial crises like we've got going here. And I'm at Rubino.Substack.com. And most of what I publish is free, so you can check it out outside the paywall and get most of what I publish. And then the specific investment advice is what's behind the paywall if you want to see portfolios and specific strategies, stuff like that.
How much damage do you think has been done to the global economy by the Iran war?
Potentially quite a bit. Obviously, it interrupted the flow of energy and made oil and other power sources more expensive, which is a problem right there. But maybe bigger is that the closure of the Strait of Hormuz also constricted the flow of fertilizer. And the way the global food chain works, or supply chain, is that different things are planted at different times around the world, and then those things have to be fertilized on a certain schedule in order to progress to being harvestable and to produce a lot. And the interruption due to the war is causing a lot of places to not have fertilizer when they need it. And that means the whole growing season is disrupted. So we might have a food shortage later in the year because a lot of things that got planted never got fertilized. That could be potentially a very big deal for the global economy.
Will the rebuilding of Iran and the Middle East be good for commodity prices?
Yeah. A lot of stuff has to be bought in order to take a country that's been decimated by a war and bring it back into the global economy. So I suppose the price of some commodities will go up. That's totally not worth 10,000 lives or 100,000 lives or whatever the body count is going to end up being. But it is very possible that a lot of commodities will go up because of increased demand once the dust settles over there.
What are the odds of a recession in 2026?
Actually, pretty good, although there's a lot of cross currents. The whole food supply chain disruption thing is a very big deal economically, and so is spiking oil prices, as we've seen lately. Those are kind of inflationary because, for instance, the price of food will go up, but it's also deflationary because if the price of food goes up, people, have no choice but to buy less. Same thing with gasoline. If gasoline is up, people buy less gasoline, or they can't drive to work at all or whatever. And that can cause a recession. But I think a bigger deal, let me leave it there. Yeah, there's a pretty good chance of a recession because of what happened in the Middle East.
President Trump is predicting a 100,000 Dow before the end of his term. Any thoughts on how the Dow could get that high?
Oh, that's an easy one. In inflationary times, when the value of a currency is going down, the nominal value of stocks goes up. Like if you look at, for instance, Argentina, back when they had a hyperinflation a few years ago, their stock market went straight up. So if you just look at the stock market, it looks like you're looking at a picture of a healthy economy. But in fact, you're looking at a picture of an economy whose currency is being systematically destroyed. And I think that's how we get to 100,000 Dow. We're going to aggressively ease money. That's going to lead to inflation, and that in turn is going to push up the nominal price of stocks, but they won't go up in real terms. They will go down in real terms like they have been for quite a while. If you just look at the S&P 500 when priced in gold, it's in a long-term bear market. So priced in real money, stocks are down already, and when inflation really starts to ramp up, that divergence will be magnified. Stocks will go up, but they'll nowhere near enough to be up in real terms.
Gold and silver went down when the bombs started falling. Shouldn't they have gone up?
Yeah, you would think that a big war breaking out anywhere in the world would be positive for precious metals because they're usually a hedge against chaos. But here's how it works with the U.S. as the manager and owner of the world's reserve currency. Because basically, anytime there's trouble anywhere in the world, people get spooked and they move their money to the U.S. to own dollar-denominated assets. So that pushes the dollar up a bit, which makes gold and silver go down in dollar terms. And this is all true even if the U.S. is the one causing the trouble out in the world. So it's a pretty funny effect of owning the world's reserve currency, but also a temporary one. This won't last long, and things will go back to normal pretty soon.
What are your expectations for gold and silver?
Oh, I think they go up big time going forward. First of all, because the world central banks are going to have to aggressively ease in response to all the stuff we just talked about, food supply chain being disrupted and maybe a recession because of that. Everybody's going to have to cut interest rates again. We're probably going to be back in the ZIRP world, zero interest rate policy, and maybe even NIRP, negative interest rate policy. And we saw what happened earlier in this decade when you really, really aggressively ease monetary policy. You get raging inflation. So I think that that's the kind of environment where gold and silver just take off. So I think it's easily envisionable for gold to go up to $10,000 and silver to go up to $200 an ounce.
Does it look like we could see good mining markets for the next couple or few years?
Yeah, in the short run, higher energy prices raise the cost of mining. And so that's going to squeeze their margins a little bit, even though the miners are making phenomenal amounts of cash flow with gold and silver at current prices. So these first quarter earnings reports for most of the producing gold and silver miners are going to be just great. They're going to make a lot of money. They're going to have massive cash flow, and they'll probably start doing things with that cash flow. And so that's the short term. And longer term, as long as gold and silver go up, it's going to be very good for the miners. So I think the miners are just in the early stage of a long-term bull market, and there are still a lot of bargains out there.
We're seeing more and more electric vehicles on the road, and of course, fuel prices are sky high because of the conflict in the Middle East. Do you see more electric vehicles out there, and is there one in your future? The interesting thing about electric cars is the new batteries that are coming online. Several big companies are working on what they call solid-state batteries, which they claim will charge up in no time, like 8 or 9 minutes, and then go for 600 miles, and then last through 10,000 recharging cycles. If they bring batteries out like that turn out to actually live up to their hype, then electric cars are going to be a lot more interesting than they are right now. Because right now, they're a disappointment. Some of them are fun to drive, like Teslas, but in general, they don't do well in cold weather. They don't have very good range. They take a long time to charge. So a lot of people don't really, once they look at them, don't really want to own something like that. But if you improve all the metrics and don't raise prices very much, then those cars get a lot more interesting. I think that's what happens over the next 5 or so years. Now, an interesting sidelight here is that those batteries, or at least some of the new generation of batteries, use a lot of silver. Mm-hmm. So it could be that electric car demand is going to be one of the many bright spots for the silver market. So we should pay a lot of attention to the batteries. And in other words, gold dogs should pay a lot of attention to these batteries and make sure we're on top of which one is winning. And if it's a silver heavy battery, then that's yet another reason to be loading up on precious metals. Are people going to be putting up more solar panels in their homes because of rising power prices caused by the development of AI data centers?
Yeah, very possibly. 'Cause, the nice thing about rooftop solar is that the real estate's already there, and there's no environmental impact statement or anything that you have to come up with. You can just slap solar panels on your roof. And the next generation solar panels are more efficient, which means they operate reasonably well in less sunny places. So it spreads out the possible territory in which they're a good idea. So yeah, I think we'll see that happen. And the new generation of solar panels also use a lot of silver. They use twice as much silver as the current generation of solar panels. So it seems like all roads lead back to silver for us right now.
Mm. Does that mean you should perhaps be investing more in silver, silver itself and silver miners?
Well, it depends on how much you already have. And I think a lot of your listeners probably own as much precious metals related stuff as they ought to. And I know I do. I've been stacking for 20 years, so I have absolutely no interest in expanding my precious metals holdings because I already own, probably way too much in relation to my net worth. But if you kind of missed the first boat and didn't get as much gold and silver as you kind of wish you had, then, these new developments are something definitely worth watching because that might give you a good entry point at some place along the way here and allow you to get a fully invested precious metals portfolio pulled together.
Are data centers going to have to develop their own power sources because they take so much power from the grid? And the state of Maine has actually banned the development of any more data centers because of the demand on their grid.
These AI guys were incredibly arrogant. They thought they could just go in and buy up all the electricity in a given area which pushed the price up, and then expect regular people to cover the cost. And in other words, they expected regular people to subsidize the creation of these AI data centers. And now people are figuring out that it's not a good deal for them. It doesn't matter if there's a data center building an AI near you. You don't benefit from that in any way. But you are disadvantaged by that because it makes your electricity go up. So a lot of places are just saying no thank you to data centers. And that's going to potentially be an issue for the AI companies because they kind of ruined their reputation among a lot of people out there, and it's going to get harder and harder for them just to show up and demand that the local utility fund their next data center. So, yeah, I think it's going to be tough, and I think everybody's going to work it out, but one way that they work it out will be to build their own power plants along with the data center, which is, that's going to be a lot more expensive than just demanding that the utility cover their power costs. But that's what they're going to have to do. So that's good for nuclear power. It's good for natural gas because those are the power sources that a lot of these AI companies are going to turn to. And so that's, and it's all, of course, good for silver because these new power plants use silver and copper. And, whoever builds them, commodity investors generally make out because the more data centers and related power plants that are created, the more demand for silver and copper and lots of other things. So I think we're in the early stages of a very big, very dramatic commodities bull market. And the whole data center thing is one of the big parts of that story.
Of course, that means a lot more demand for copper as well. A copper or an electric vehicle uses 277% more copper than a regular vehicle does.
Yes, yeah, EVs use a lot of copper and some silver. So copper is one of those things where it used to be this boring idea, it was just this low-grade commodity that ended up being put in most of what is built, but nothing dramatic at all. Now it's an energy transition metal, it's got a cool name and everything, and the demand for it is potentially overwhelming. There's one stat that floats around out there that something to the effect that we're going to need as much silver in the next 30 years as we mined in all of human history prior to that. And it's absolutely not clear where we get that copper from. Did I say silver before? I meant copper.
Copper, yeah.
But yeah, copper. And so the companies that have working copper mines right now are in a really good position because a lot of the future copper is going to have to come from newly discovered deposits that are turned into mines. And that's a really hard process because copper mines have a big footprint and hardly anybody wants to live near one. Like there's a big mine in Panama called the Cobre Panama mine that was one of the biggest copper mines in the world, and environmental protests just shut it down. They might reopen it at some point, but it's now like 2 or 3 years of no production from that mine. And I think that's a story that we're going to hear variations of around the world going forward. So if you've got copper now, then you're in a really good place for what's coming.
And I know people oppose open pit mining, but I've seen places where there have been open pit mines. First of all, that creates a beautiful lake and a giant park around it. They stock it with fish. So if you show people long term, this is what this is going to look like, maybe they'd be less opposed to it. Yeah,
as long as there isn't pollution everywhere because of the processing of the copper. Because, for instance, Lake Coeur d'Alene in northern Idaho is polluted with heavy metals because of past silver mining that washed into the lake. And so you would have to convince people that nothing like that is going to happen with that copper mine, and I don't think most people trust big miners or the governments that the big miners pay off in order to get the permit, et cetera, et cetera. So it's going to be more complicated. But the fact that you could point to past copper mines that are now really beautiful landscapes, that would help a lot, I think.
John, do you have an overall view of what you think is going on and how people can be prepared for it?
Yeah, chaos is coming. We are taking on way too much debt at every level of every major society out there, and history tells us what that means. It means currencies start falling in value at accelerating rates, and financial assets just kind of blow up, and you have geopolitical crises and civil unrest. And this is happening at the same time that we have a lot of basically culture wars starting up in a lot of the countries around the world, where immigration ran out of control, and now you've got different cultures vying for control of countries that never had to deal with anything like that before. And that's going to happen at the same time that these big financial crises happen. So I think that we should be preparing for chaotic times, and that means developing resiliency in our finances and in our lifestyles. So you should have a garden, obviously. You should have lots of gold and silver, because they will hold up really well during the kind of chaos I'm sketching out. And you should develop a lot of skills. Skill stacking is really important when the world is not stable. So you ought to be able to do a lot more things than you can now if you're not currently super handy. And you also should be able to defend yourself. So gold and silver, a garden, guns, lots of skill stacking. All of those things are what people should be looking at right now. And as the saying goes, hope for the best, but prepare for the worst.
Should, with the massive layoffs expected from the expansion of AI, should companies that lay off people have to pay a special tax to help support those layoffs?
Oh, yeah, that's another part of the chaos that might be coming. There are a lot of people, actually the AI guys are the ones who say stuff like this. They'll say, oh, we're going to have 98% unemployment in these sectors going forward. That doesn't seem like the kind of thing that it's wise to say when you're selling the product that is going to cause that kind of trouble. But it's happening in tech right now. A lot of people are being laid off. And if that continues through healthcare and law and a lot of other information-heavy industries, then, yeah, we're going to see a lot of unemployment. At the same time, we're seeing culture wars in Europe and other places, and inflation that impoverishes people who trust the government by holding on to a lot of cash and bonds and things like that. So yeah, it's going to be incredibly messy, and we can't really count on anybody to bail us out from stuff like this. So we're on our own in a lot of ways, and we should be getting as resilient as possible as quickly as possible.
Saw an interview where the latest generation of AI computers, because they live in the code world, have found ways to hack into virtually any computer system. Well,
yeah, there's a lot of really expert hackers out there. But, I think the bigger hacking story is quantum computing. Yeah. We have a new type of computer being developed right now that is terrible at some things and really good at other things. And one of the things it's good at is cryptography, code breaking. And so if a quantum computer emerged today, fully functionally, it would be able to hack into any bank account. It would be able to break the encryption of Bitcoin wallets. It would presumably be able to break into the missile launch systems of different countries. So you got a Skynet potential there. Mm-hmm. And they're making progress. They're getting better at quantum computing. And it's possible that there's stuff going on in secret, like at DARPA or in Chinese labs that they're not telling us about, where they're further along than we're hearing. And whoever emerges with the first serious quantum computer potentially rules the world. So that's yet another big thing we have to worry about here.
Well, on that optimistic note, John, how can people subscribe to you on Substack?
Okay, I'm at Rubino.Substack.com. And, I write about the stuff we just talked about. So if it's interesting at all, come on over.
John, thank you so much for being on This Week in Money.
Thanks, Jim. Yeah.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, and he just told you how to find him on Substack at Rubino.Substack.com. Coming up, Hilliard MacBeth, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, MacBethMcLeodPartners.com. He's speaking to us from Edmonton. Welcome back to the show.
Always a pleasure to be on your show, Jim.
Can you tell us how people can get your book When the Bubble Bursts and how it applies to the current market?
Well, the usual way people are using it these days is to go online and order it either in ebook form or in printed copy. But you can also go to all the best bookstores around, and if they don't have it in stock, some of them have it in stock, some of them would order it for you. So, and as far as the pertinence, it's extremely timely because the stuff that I talked about back in 2015 and 2018, there's two editions, is happening now. So I was very early, but exactly what we talked about in the book and what my research told me is what is unfolding now. So it's going to be a crash, not a correction, but a crash, and it'll have ripple effects through all of the Canadian economy.
Now, the Strait of Hormuz is supposed to be reopened for 2 weeks. Do you think the war in Iran is over, and what could it mean for the price of crude?
Well, for now, the war is over, but the ceasefire, it was broken within hours by Israel, and now there's a big debate as to whether Lebanon activities between Israel and Lebanon are included in the ceasefire or not. And Trump said it was never included, and Iran believed that it was included, and Pakistan is in the middle somewhere. So there's already trouble, but in the next 2 weeks, it's going to be very difficult because if you look at the 10 points, I've got my weekend note, which comes out every Friday. I've written about it to come out on Friday of this week, April 10th, and I just list the top 3 or 4 points, and none of them are going to be easy for the U.S. to accept. And yet, on the other hand, I don't see Iran backing down on them. So, for example, the Strait of Hormuz, they've got this wonderful position where almost all of the Strait of Hormuz is bordered onto the coast of Iran, and they can apply a toll. And right now, it's $1 per barrel. So, 100. There's usually about a million barrels in a tanker, so that's about $1 million. It's not a big deal when you consider the whole cargo is worth $100 to $200 million. So, but it gives recognition to Iran's control over the strait, and I think they probably are really enjoying that, and they like it. And now there are other paths through the Strait of Hormuz. There's the path next to the Iranian coast, and there's the other side of the strait, but it's very narrow, and Iran could stop you if they wanted from going on either side of the strait. And so it'll be difficult. If the U.S. insists on that particular clause, out of the 10 clauses that were talked about, the ceasefire won't last very long, I wouldn't think, because it would be too big a capitulation for Iran.
What happens to Trump if the Democrats take both the House and the Senate in the midterm elections in November? And what happens if Trump takes the House and Senate with increased numbers for the Republicans?
Well, just to take the second one first, the polls show that there's very little likelihood of Trump's party increasing its hold. Of course, Trump's not on the ballot in the midterms just all of the House of Representatives, like 450 or something like that, and a third of the senators, so about 33 or 34 senators of the 100 senators are up for re-election. And the polls, Trump is at the lowest in the polls of any president ever at this stage in his term. And many presidents, like Obama, for example, was 41, 42, 43%. And in the midterms, he lost control of one of the houses, or maybe both of them, I can't remember. When he was elected, he had control of all three, and he lost. So even a president has a fairly good popularity rating going into the midterms, usually loses, but this time it's going to be worse than that. So, and we can see also from the special elections, so we call them by-elections in Canada, they call them special elections. The Democrats have been doing much better. Even in some staunchly Republican seats, the Democrats have become competitive in these special elections. So people like to send a message if they're not happy. An awful lot of Americans are unhappy with the attack on Iran. They don't understand why U.S. soldiers should have to get involved in something like that. Why we're spending all this money on bombing a country in the Middle East that very few Americans could find on a map. So. And on the other side, if the Democrats, which is much more likely that they would increase their hold. So right now they're divided in the House, and they're behind about 5 seats in the Senate. Those are rough numbers. They could easily pick up. They probably will almost certainly pick up control of the House of Representatives, and it's still difficult because only a third of the Senates are up for each election. It's difficult to flip the Senate, but they might. And in any case, the House of Representatives are the ones that initiate the impeachment process, and I would think there'd be a lot of pressure from a lot of members to do that. The problem with that is you can initiate the impeachment and you lay out the accusations, and then it goes to the Senate for kind of like a trial, and the 100 senators becomes the jury, and then they vote. But it requires I think it's a 2/3 majority, so that's 66. That's almost impossible to get to remove a president. So the Democrats may not do that because they've done it twice before in his first term, and both times they lost the vote in the Senate. So it would be embarrassing to try a third time and lose. So more likely what they'll do is they'll bring back the Jack Smith investigation that was halted as soon as President Trump got elected. And that would be quite serious for Trump because it would involve criminal accusations rather than just a removal from office. So I think it's more likely the Democrats will bring in. You'll hear a lot more about things like the Epstein files, and the other things that happen. There's a new thing that's happening in the second term, which is really quite amazing. My career was all in the financial sector, and the corruption that's been going on with trading. I don't know if they're friends of Trump, if they're family members of Trump, or they're just people that seem to be lucky enough to get inside information about what announcement he's going to make a few hours before he makes it. But somebody has been putting some very big bets on the futures market or the options market just before an announcement of Trump. And when you can tell pretty much which way the market will go after the announcement, and making literally billions of dollars. So the other thing that's really questionable is the involvement in cryptocurrency. So the Trump family and Steve Witkoff, who's Trump's main representative in these negotiations with Iran, his family have been running this crypto scheme, and they've made billions of dollars off it so far. And undoubtedly there would be an investigation into that as well, and probably many other things. So I think for Trump, it's quite important that he find a way to hold control of the House of Representatives. In November, it's going to be very difficult, but he'll be pulling out all the stops to do it. But I don't think this Iran war is going to accomplish that for him. And maybe he thought it would, but this is probably more likely to hurt him rather than help him.
Is a possible end to the war in Iran bullish for the stock markets?
Well, it's interesting question, because the stock market, you and I have talked a few times over the last months that the stock market's been expensive, and it actually goes back a couple of years with the based on the historical ratios, price-earnings ratio, price-to-book value ratio, Warren Buffett's favorite, which is the stock market capitalization over GDP, and many other, where the stock market is quite expensive. Personally, I like the Shiller PE, which takes a 10-year average of the earnings, moving average of the earnings, and that one's it got up to a very high level in 2000, just before the dot-com bubble burst, and it's been hovering around a similar level for the last couple of years. So the mega stocks have pulled or drawn the stock market into a very overvalued position, because it's all weighted by capitalization, and those big companies are like NVIDIA are extremely heavily weighted in the index because they're so large, or $2 trillion. So having said all that, the war comes along, February 28th, the stock market goes down a couple of points, everybody panics, oh my God, and a whole bunch of other people say, oh, I got to buy the dip. But really, it never really got much below about 6,400, and the peak was 7,000. So it didn't even, I guess some measures of it probably reached the 10% threshold for a correction, but none of them reached the 20% threshold, which would be normal. I mean, there's always been in the past 20% corrections every 4 or 5 years, and then once every 10 or 15 years, there's a 50% correction. But none of that's happened this time. So, while it would be tempting to say if the war is resolved somehow, and we go back to where we were before February 28th, the stock market would have a big rally. It would be rallying from within 3% of its all-time high. So that from a very overvalued high. So it's hard to make the argument that the end to the war would do that. And then on the other hand, or in addition to that, it's hard to imagine an end to this war that doesn't take us back to a place that's actually worse than we were before the war started. So it's probably not going to be positive for the stock market. Now, the other thing, of course, is there's different stock markets in the world. There's Asian markets, European markets, U.S. market. U.S. market by far is the biggest. It's more than half of the value of all the stocks in the world. But there's other stock markets, and some of them might be better valued than the U.S.
Is China likely to be a winner or loser after the war with Iran finally ends?
So, a good question about China. So when the Strait of Hormuz was originally closed, when this whole thing started in 5 weeks ago, the people pointed out that the biggest buyer of oil that went through the Strait of Hormuz, of 20 million barrels, is China. And so they were going to be affected negatively by the cutting off of that oil supply. However, they are a big producer of oil. They're not quite as big as Canada. Canada is number 4, and China's number 5 at about 4.3 million barrels a day. But they're a much bigger country. They need a lot more oil. So they've lost a good portion of what they import. But a couple of things to know. First of all, they import a very small amount compared to the total usage that they have of all their energy. So it's a large amount in terms of barrels, but it's a small amount in terms of what China needs. Secondly, so they can survive quite easily without it for a few months. But secondly, also, they have the largest storage that nobody really knows for sure, but they've got some massive salt caverns, and they might have as much as 12 months of oil stored up in these caverns. So they've been very far-sighted about this, and they would easily handle a long-term outage on the Strait of Hormuz. And of course, thirdly, it's unlikely the Strait of Hormuz would be cut off entirely. And China's got a very good relationship with Iran. So if Iran controls the Strait of Hormuz, then it used to be 100 ships a day. If only 20 ships a day are getting through, probably China's needs would be taken care of within those 20 ships, and the other 80 ships were going someplace else. So China could easily become a very big winner of this because they aren't as sensitive to the region that we're talking about, and and of course in other areas they've got a lot of momentum right now. That the U.S. is busy fussing over an Iranian war, a totally unnecessary war in Iran. China's just quietly moving ahead to become the world's largest auto producer, the world's largest electric auto producer, and the only producer really of rare earth metal magnets, which all computers and weapons need. I mean, they got just the list is so long. It would take up the whole time we have to go through it, but they've made themselves really indispensable. So they're in a good position to survive this quite well.
How deep is the crash in the condo market in Toronto, Vancouver, and other cities? Is it near the bottom? Will it affect the market for single-family homes and other real estate?
So the condos are going through a crisis. The Toronto and Vancouver condos were a lot of the construction. You know, the statistic everybody remembers is at one point, actually for more than 2 or 3 years, there were over 200 cranes active in Toronto building high-rise apartments, almost or buildings, but almost all of them were condos. Very few office towers are being built. So all those cranes working away, they built, and what they were selling the boxes in the sky to were speculators. So they were building very small, 400, 500 square feet apartments. And they were selling them to speculators, and the speculators never really expected to take delivery of them. They were paying way too much for them. They're paying, like, let's just take a ridiculous example, $1 million for a 500 square foot apartment, $2,000 a square foot, and they were putting down $50,000, just 5% down payment. And it was they didn't have to worry about the rest of the money for a couple of 3 years, because that's how they would do it pre-construction. So the construction hadn't started yet. They assumed that if they paid $1 million for that condo, by the time it actually was on the market, they might be able to sell it for $1.1 million or $1.2 million or something like that, and they would double or triple their money, their $50,000 down payment. Now, of course, things went the opposite way since 2022. The buildings that were started in 2022 are now coming out of the market in 2026, and they don't have the $1 million or the $950,000 in this example, and the bank won't lend it to them, because the bank is saying to them, well, that building, those units, or our latest numbers are indicating that maybe $800,000 at best, and so you have to come up with the balance, and so you have to come up with $250,000 to get the financing on $800,000 unit, because we can only lend on what it's currently worth, not on what you agreed to pay. So there's just a huge shakeout happening. And one of the things that the banks are doing, which is unfortunate in my opinion, but maybe it's the right thing for them to do, I don't know, is they are exercising what they call forbearance. So they're not foreclosing on all of these units. They're probably quite rightly realizing that if they dump thousands and thousands of these 500 square foot condos on the market in Toronto and Vancouver, there's going to be no buyers for them, and so they're just going to be wasting a lot of money in fees and lawyers' fees and realtors' fees and that sort of thing. So instead, what they're doing is they're talking to the developers or the people and just saying, well, let's just wait a few months and hopefully the market turns around. So the banks have some discretion. But in the end, they'll have to foreclose on these units or use power of a sale. So in some provinces, it's called power of sale, but it's basically more or less the same thing. And in the past, and it's been so long, but you have to go all the way back to the 90s or the 80s. In the past, what happened was that when the banks finally get to the point where they're going to clean it up, they don't care. Like they literally, if that $1 million condo sells for $400,000, they don't care. They just want it off the books. And but we're not there yet. We're not at that point yet. So what we got, so the question was, what's the current status? Well, a whole bunch of these people are unable to close the deal. The banks and the developers are trying to sort it out. Most of the units have not come onto the market yet. The people that try and resell, I mean, one of the things that was attractive about these pre-construction condos was the sales agent told them that they could resell their commitment to this contract to buy a completed unit at any time before the building was complete. But that option has been closed off now to them. So either because the prices come down so much or because of legality. So they're stuck with it. And what most of them were not told, or if they were told, they didn't hear it, they didn't listen, was that they're on the hook for the whole difference. So if they can't just walk away from their $50,000 down payment, they're on the hook. If the thing ends up selling that they contracted to pay for $1 million for $600,000, they're on the hook for the whole $400,000. So there would be lots of people that, to get out of that, would have to declare personal bankruptcy. So it's a nightmare. It's going to drag on for, in the U.S. it was 4 years of chaos, and then another 4 or 5 years of sorting out all these legal questions, like the one we're discussing right now. So probably we're in year, I guess we're in year 3 of that, all that. So we maybe got another 4 years to go. But the cleaning up stage of it, where the banks just put it on the market and say, I don't care, just get rid of it. It comes in year 6 or year 7. It doesn't come in year 3 or 4. It takes a while to get there.
What's the latest on sales and inventory of homes in Canadian cities?
So the MLS, the multiple listing services put out by the real estate boards, and they've got like 4. They got average home price. They got I don't know. They got something called the House Price Index in Toronto. I just checked it, and the peak was in 2022 in Toronto. This is an average of all of the homes, I think, single family and condos. And it was just under 1.3 million, and today it's just over 900,000. So it's about a $300 and something thousand drop. In percentage terms, it's 26%. It's only it's less than $100,000 above the 2017 peak, which was around 830,000. So we're talking 9 years of price correction, but it's even worse than that because the some of those units, if not quite a few of them, have been modified. Some of them are teardowns that have been brand new houses have been built on it, and other ones have had major renovations done to them, and then some of them, almost all of them, had minor renovations done to it. So if you included all that into the equation, then you'd be well over 30% a decline. And then if you included inflation into that, we've had at least 20% inflation since then. So if you adjusted for inflation, you'd be looking at a 50% decline in the prices. So that's pretty severe. And now there was a lot of inventory. On the second part of your question, I think, was inventory. There was a lot of inventory. There still is a lot of inventory, but the inventories have started to come down. And I don't think it's so much sales, although sales have picked up from a very, very low base. But there's some bargain hunters out there now starting to look at it. But it's more like people are just giving up on the listing. So they basically, these listings usually last for 3 months or something like that. And at the end, they have to decide whether to renew it or not. And they may just be pulling it off the market. If they're living in it and they don't have to sell, then that would be probably the obvious thing to do for them. There's lots of inventory, but the inventory is not going up anymore. Prices have come way down, and my opinion is they'll go down further because the banks haven't even really started the cleansing, the washout phase of the thing. And so it's, but people see that prices have come down that much. Some of them see it, it's a good time, it's a bargain. Other of them see it as the trend is obviously down. Why would I step in and try and catch a falling knife? So that's kind of where we're at. And that applies to condos as well as single family homes on the ground and everything else in between. And now it's spreading into commercial real estate and that sort of thing as well.
How are the banks holding up in this real estate crash? When you wrote your book, did you expect the banks to sail through the crash unscathed?
Well, they're selling through the crash unscathed, so I did not expect it. However, I would say that as I mentioned, we're still early days. So what they've done is, of course, the banks have many defenses against the full impact of a crash like this. The first one is a chunk of the houses, the loans that they've done are insured. So the CMHC insurance, and there's two other private insurers that they use. And what that means is if that, to use that $1 million condo selling for $600,000, that's CMHC's problem. That's not the bank's problem. The CMHC still gets the full value of the loan that they made. So they have to make a claim and so on and so forth. But the CMHC pays the full cost of it, and so the banks don't care in that percentage that's insured. The other part of it is, for the longest time, banks were saying, well, we've got 50% equity, so on average in the uninsured portion. So the banks would say, okay, I need 20% down payment to make that loan in the uninsured portion, but they had all kinds of homes where the mortgages are old and people have been there for 3 decades, and so the house price has gone up. The mortgage has been paid off, so they've got really good equity in those homes. Those homes won't be repossessed by the foreclosed by the bank. So it's a small percentage of the total. And the other thing that they've got going for them is that the government is very interested in making sure that the banks don't fail. So if anything, the government will do, as they did in 2017, as they did in 2020, and as they may do sometime in the near future, they may bring out some policies that help the bank get through any difficult times. And then the other thing they have going for them is they don't have to recognize the losses. So there's an elaborate accounting method, which I can't go into. We don't have enough time. The details of, but basically it's left up to the banks to estimate how much reserves they should keep for loan losses in the future. So, and they have this sort of like 3 categories that they have to put, these 3 buckets they have to put these loans into, and most of the loans are going to be paid off, no problem. The second category is, well, there's a problem with these loans, but we think we'll get full recovery, and that's because the loan is seldom the full value of the asset, right? So even if somebody defaults on a loan, the bank can seize the asset, sell it if it's a house or whatever, and get their money back that way. And then the third one is where the bank is exposed to a loss. Well, so in that third bucket, the percentage that the banks have reserved for is very, very small, and it looks like on paper it looks like they're right. The loan losses are tiny, like 20 basis points, a fifth of 1%. And in 2009 and previous crashes in 1990, 1980, the loan losses went way up over 1%. So we're at 1/5 of that now. So the only way the banks would get into trouble would be if we had a recession that was deep enough, where there's enough unemployment to where that actual loan losses, not estimates, but actual losses went up over 1%. That would be losses after, the CMHC insurance was paid and that sort of thing. So it's a ways off. It doesn't take a super bad recession to get there, but we haven't, the recent recessions have been quite mild. So it's quite reasonable that the banks are estimating that the next recession will also be quite mild, and the banks will sail through unscathed, and that is reflected in the share price of the banks. So the banks like Royal Bank is over $230 today. A few years ago it was $100. So obviously the people buying shares in Royal Bank don't expect that there's going to be any big hit to the banks because of this housing crash, but I would have another opinion. I would say that these loan losses are going to be surprisingly big, and starting with the condo defaults and then spreading to single family. But until it actually happens, I don't think the banks will recognize it, and the government may step in and help them out before they get into real big trouble. That the Canadian banks, not only have they never defaulted in the sense like other countries like the U.S. and Britain have had, but they've never even cut their dividends. So in the 2009 crisis, they probably should have cut their dividends, but they didn't, and they never have. So they've the dividends are really steady, so the shareholders are very happy with the Canadian banks, and so far the shareholders have done very well, and it's been a good experience for them. So it would take an extraordinary crash to impact the banks.
More native land grabs in BC, the latest one to be discovered in the Gulf Islands. Do you think the banks will continue to take on the risk of lending mortgages when the land title is uncertain?
Well, it wasn't that long ago. I mean, in people's perspective, it's a long time, but 30 or 40 years ago, I can remember when the banks wouldn't lend to places like Gulf Islands. Like you could get a mortgage on your house in Vancouver, but you couldn't get a mortgage to buy a place in Gulf Island and use the collateral of the place in the Gulf Islands to secure the mortgage. And it's because it's so darn difficult to sell properties in those remote locations. I mean, remember Gabriola Island, on that one, visiting a client there, and she said, "Yeah, there's no ambulance service here. Like if anything happens, you have to wait till the morning to get medical attention, and of course, they're more likely to be picking up a corpse rather than saving somebody from a heart attack, right?" So stuff like that. So it's there's a bunch of reasons why the banks would not want to lend to some properties, and land claim problems are just on top of everything else. And so in a recession, which we either are in now or we soon will be in, most likely, the banks all pull back on that kind of lending. They stop lending to high risk situations. And that, I'm sure, would be one of them.
Why is the U.S. economy not in recession if jobs growth has been flat for the last year or longer?
It's a really big mystery, So they came out with the GDP on Thursday of this week, and the annual rate of growth in the GDP in the U.S. was 0.5%. So basically almost flat, right? And so all that you need to do that. So the way the GDP is calculated, they take all of the transactions, credit cards and everything, they add it all up, and they get the nominal GDP, they call it. But what they report is the real GDP. So they have to take an estimate of inflation and subtract inflation from. So if the nominal GDP is 6%, that's all the transactions in the economy, and inflation is 3%, then they say, oh, the economy grew by 3%. So where we're at right now is that half of 1% is nominal GDP is 3% and inflation is 2.5%. So you've got a 0.5% annual growth, which is basically no growth. But what if that 2.5% estimate of inflation is wrong? Because if the current CPI was, I don't want to say rigged, but it was calculated. It was the formula was adjusted during a time when the government and everybody else was really afraid of cost of living indexation, which had happened after the inflation in the 70s. So in the 80s and the 90s, everybody went through and said, oh, we got to clean this up. We can't have inflation giving all these wage increases to people that have this in their union contract. So they changed the way that CPI was calculated. So it was something that didn't jump higher immediately when prices rose. If the inflation, I'm just suggesting it's 2.5% for example purposes, but it's probably pretty close to that, is 0.5% too low, which is quite plausible, if not likely, then there's no growth in the economy. And one of the places where we see it is the unemployment rate among what do they call them? The broad masses has gone up a little bit. The unemployment among the wise ones, which is 55 to 65, has also gone up a little bit. And the unemployment among the young people, 16 to 25, has gone way up. So the economy in the U.S. is doing okay, but it's not great. But it's supported too much by the super wealthy people who are obviously have these huge gains on the stock market, and they're spending them, and that's keeping the economy going. Plus all of the AI related and business development expense, which is building these data centers all over the place and creating some jobs that way too. But in terms of the broad masses of consumption, which is what North American economies are basically based on to a large degree, with the inflation we had in 21, 22, and now the gasoline and diesel prices increases that we're getting now, there's going to be a squeeze, and it's probably correct to suggest that if we're not in a recession, we're in a very slow growth period.
Does it look like the oil crisis and price of gasoline and diesel are pushing more people to buy electric cars?
There's certainly lots of anecdotal evidence of that. It's hard to tell. All over the world, the move to electric vehicles was soaring, and except for North America. So we're sitting in North America, Canada, and the U.S., and we can't really see because we're blinded by what's in front of us. And but in all over the world, it was the numbers were 15%. Now they're 25 or 30% electric, and this surge in prices for gasoline and diesel are just going to speed up that trend. It was a trend that was already in place. And, the tipping point, people say that once you get, it's a really low percentage. I was surprised how low it was. It's some single digit number, like 6 or 3 or 8% or something. Then the trend is unstoppable at that point. So we're way past that now. And the other thing, of course, is that prices on electric vehicles have come down a lot because the battery prices come down a lot. When I bought my first Tesla in 2016, the battery alone cost $40,000. And today, that same battery is valued at about $10,000, and it's probably a much better battery too. So with better range and everything. So now they can easily sell a car in China and other places for $30,000 that has a good battery and maybe not luxurious interior, but decent interior, and still make a profit. And so that is going to move it even more than the electric, the price of the gasoline and diesel. But I was for some reason in my neighborhood we've got a lot of houses under construction. They all seem to be reaching completion right around now. But so there's all these F-150 pickup trucks and Dodge Ram trucks and one of them just pulled up as I was walking the dog. I thought, boy, I bet that guy wishes he had an electric truck. but there aren't any. I mean, Ford F-150, the dumbest thing I've ever seen is just before this happened, about 6 months ago, they decided to stop the production of their electric. Imagine how many Ford F-150 electrics they'd be selling now. It'd just be, because it takes hundreds and hundreds of dollars to fill up one of those trucks at the current prices for gas. And I'm sure at least a few of them would be willing to switch over. But so it'll be, maybe they'll bring that back. I don't think they probably have forgotten how to make the electric F-150. I understand there's in Ford and Mercedes and GM, there's some new models coming out fairly soon, and they'll be able to take advantage of that new renewed interest in electric.
Is inflation likely to soar to higher levels higher than seen in 2022?
Well, that got 2022 was it got pretty high. It was up in the 9. I think at some parts, some months it even got as high as 10% at an annual rate. Certainly 9% in the U.S. and Canada. Well, that's a pretty high hurdle from the current 2.5%, 3%. But for sure, it's going higher. I mean, it's like it has to go higher. Now they'll bring out a version of CPI that excludes energy costs and food costs, but it isn't just the cost of oil; it's the cost of fertilizer. And I was thinking about a farmer; he buys all his diesel and his fertilizer in around this time of the year, and then he's planting, he's fertilizing, seeding, and then in the fall he spends a bunch of money on harvesting, and a lot of diesel is burned to do that. So his expenses are going to be a lot higher for food because of that. and the fertilizer prices have gone up a lot. I was surprised, but a lot of the fertilizer comes through the Strait of Hormuz, and the natural gas prices have gone way up, not in the U.S., but in other parts of the world, Europe and that. And of course, the fertilizer to a degree is based on natural gas. So we're going to have higher inflation. I don't know if it'll get to 9%, but it seems like it if it's currently 2.5% to 3%, I think pretty easy for it to get to 4.5%, 5%. And interest rates will have to go higher because they're currently at like a 5-year fixed mortgage in Canada is 3.75%. Well, if inflation is 5%, the 5-year fixed can't stay at 3.75%. The government bond rate can't stay at 3.5%. The bond yields have been inching higher in the U.S. The 10-year is now over 4%, and it, the highest it got in the last couple of years, I think, was around 5%. So I could see it going back up there. But inflation goes to 5%, bond yields go to 6%, CPI goes to whatever. It's hard. And then, of course, central banks have to decide whether they're going to raise rates or not. But that's we're going to have a new Federal Reserve governor in a month, and that'll be interesting.
Are the bank rate and mortgage rates likely to go higher because of the rise in inflation?
Yeah, for sure. I think the bank rate, the Bank of Canada doesn't want to raise rates because the economy in Canada is very weak right now, but they'll have to. They got caught in 2021, 2020, 2021, 2022. I don't know if you remember, but temporary, transient. There's a third T. I forget. Temporary, transient. Anyway, they were saying, and that was their excuse for not raising rates from below 1% when inflation was 3%, right? So they said, "Oh no, inflation is only temporary," and it went to 9%. So they basically, what they did was they raised rates by 50 basis points, about 6 or 7 meetings in a row, and they do not want to look. I mean, that made them look very bad, and they do not want to be that embarrassed again. So they'll be much quicker to raise rates this time around if inflation goes higher, or probably when inflation goes higher, unless the war is resolved in the next month or two. But if it goes much beyond June, then rates will go higher for sure.
Why could the U.S. dollar lose its position as the world's reserve currency, and what would replace it? Perhaps Bitcoin?
Well, yeah, because, Iran has now got control of the Strait of Hormuz, and might be temporary, might be permanent, I don't know. And they're going to charge a fee to go through the strait, and you're going to have to apply to the officials in Iran to have your ship go through there, and you have to give them all the information about where the cargo's going, where it came from, all that sort of stuff. And now they want payment in cryptocurrency. They don't want payment in U.S. dollars. And the reason for that is that Iran has, since 1979, since the revolution and when the Ayatollah took over in 1979, they've been under sanctions, and they're limited access to the U.S. dollar-based SWIFT international payment system. And so they want to move outside of that, and they said, we want payment in cryptocurrency. So now are they going to leave it cryptocurrency? I don't know what they're going to do. The other option would be renminbi, which is the Chinese currency, the Hong Kong dollar, which is linked to the U.S. dollar, but not actually, it's not the same as the U.S. dollar. There's a lot of different options, but the reason it's important to mention the oil going through the Strait of Hormuz is by far the biggest trading of all commodities in the world markets is crude oil. It's by far the biggest. And up until now, it's been entirely in U.S. dollars. So that people buying oil creates a demand for U.S. dollars, which makes the U.S. dollar, among other things, it makes the U.S. dollar the international reserve currency. So if crude oil was to move away from U.S. dollar, then gradually other things would move away from the U.S. dollar as well, and that could be a crisis for the U.S. dollar-based. China has been for years selling since 2000, so 26 years when they were introduced to the World Trade Organization. they've been selling a whole bunch of stuff to the U.S., more and more in Canada too, and they get paid in U.S. dollars when the buyer in America buys that good. And China, up until now, has been leaving it in U.S. dollars. They could leave it at a bank in New York, and then they invest it in U.S. securities, U.S. dollar securities, something like that. They don't want to bring it home and convert it into renminbi, because that would push the value of their currency higher and make their exports more expensive. So they've resisted the temptation to convert it back into their home currency up until now. One of the things China's been doing instead is gold. So China's been buying gold steadily. It's partly because they've got all these U.S. dollars and maybe they don't want to get stuck with these U.S. dollars. Same with Japan, same thing, same reason probably to some degree. They've been buying, and other central banks have been buying gold as well. One of the few central banks in the world that hasn't been buying gold and hasn't got any gold is Canada. So we used to have a lot of gold, but in Canada we sold it. So gold, cryptocurrency, there's a chance that the U.S. dollar might not be the reserve currency. Maybe it'll take a while, 5 or 10 years, but it can happen faster than people can imagine sometimes.
Will Elon Musk's IPO of SpaceX at $2 trillion see success in June?
It's amazing. This is an amazing story. So I heard about SpaceX around the same time I bought my Tesla in 2016. So that's 10 years now. And I didn't think much of it. I can't imagine anybody making a profit sending rocket ships into the sky. But I found out that Starlink was a new communication system for people that don't have access to internet in rural areas and in remote areas, that sort of thing. So Starlink is the real gem inside the SpaceX. And so what they were going to do is they were going to spin off Starlink as a separate IPO and leave SpaceX, the rocket launcher portion, private. Now they decided to take the whole thing public, and not only that, but they merged, or Elon Musk, I guess when I say they, I should say Elon Musk merged X, his possibly money-losing social media thing, and his AI stuff, which could be good. I mean, he was early in getting a bunch of NVIDIA chips, so maybe he's got some kind of a lead. I don't know. They merged all of that into SpaceX as well. So now, a few months ago, they were talking $850 billion. The latest, as we get closer to June, to the date, it's been filed, so I suspect it's going to happen in June if the market doesn't collapse. They're talking $2 trillion. So just in the last few months, it's doubled, more than doubled, from $850 billion to $2 trillion. So it's a big, big deal. I mean, what happens is a bunch of money gets sucked out of other things that people have their money in if they want to buy into SpaceX, and because it's such a large market cap, it's going to be included in the index, the NASDAQ index. And what that means is once it's included in the index, all of the money managers that track the index or performance is measured against the index, they have to buy SpaceX. They might say, oh, I don't want to buy that, but they have to buy it because what if SpaceX doubles and they don't have a big percentage of it? So they're also going to do a couple other things that will make it almost guaranteed to succeed, and that is they're only going to issue, out of $2 trillion, they're only going to issue $75 billion or $100 billion worth of actual securities. So everybody will be chasing a very small amount, like 5% of the value of the total company, and that'll push the price higher too, because they'll want to have it in their portfolios, but there's only a limited number of shares available to buy. So in order to make all this happen, Elon Musk has bullied the NASDAQ, the index in the U.S., into making a bunch of changes to their rules, because some of this wouldn't be possible without changes to the old rules. So here we are. I think it'll probably go ahead in June. It'll probably succeed for a while, but we also might look back on that as we've been in this crazy market with NVIDIA and all these different companies, and we might look back at from 2028 or 2029 and say, hey, that was that was a threshold moment in 2026 June when SpaceX came out.
Is AI about to destroy a large number of jobs?
Well, I don't know. There's some really good. One of the guys that's really good is that his name is Garth Waite, and he's at UBS now. He used to be at Credit Suisse, but then they merged with UBS, and he says that the productivity gains from AI are going to. I talked a few minutes ago about how the market was so overvalued. He claims the market is not as overvalued as it looks because AI is going to lead to massive productivity gains. And of course, productivity gains, another way of saying that in translation is fewer people working and producing the same amount of output, right? So you can have, instead of 100,000 employees, you might have 50,000 employees and still have the same revenue. So the profit margins goes up, and that's what justifies the current stock market valuation. So, but if that were true, then a bunch of people are going to be unemployed. And those jobs in that, what I call it, the college-educated white-collar jobs are really in question because, think about the Royal Bank of Canada, for example. They got the big, 50, 60, 70-story tower in Toronto as their headquarters. And every floor used to have like dozens and dozens, hundreds of clerks and middle management and all that sort of stuff, tracking all the loans. There's a lot of tracking to do and keeping track of the branches and how is your sales going and all that sort of stuff, and calculating the ratios and all that kind of stuff. And now with AI, maybe they won't need any of those people. Maybe you just feed the numbers into AI and they come back and say, yeah, Mr. CEO of Royal Bank of Canada, this is all good except for this one area. You better look closer into that. And so it could happen. I would be more likely to believe it if when I send a text, autocorrect on my texting is so bad, if it would actually got to be good. I mean, some of the words they changed the words I type in to, I would never use, and nobody would ever use them. So why is the text, predictive text so bad that it can't even figure out what I'm about to say next when I'm saying something that I say almost every day? So you sort of wonder how good AI is going to be, but eventually it'll probably be good. But my guess is there'll be some flaws in it for the first 2 or 3 years that might make it difficult to fire all those people right away. But eventually, probably there will be. But there's not. The population of the world is not growing much anymore. The birth rate in a lot of the societies, including Canada and the U.S., is hitting record new lows. So we may not have all those people. Maybe AI will come along and save us because we won't have those people to hire anyway.
Do you think a lot of people will want to buy Elon Musk's latest version of robot, and what would those robots be used for?
Well, it's kind of like I don't know where I saw this somewhere. It said somebody was saying, I don't want AI to take over my job at work. I want AI to take over my laundry and my cooking and my house cleaning and all that kind of stuff, so I can spend more time at work. So it seems to be just the opposite. So I don't know. I heard numbers like $20,000-$30,000 US to buy those robots. I don't think there's a big market for people to spend that kind of money on a robot at this point. It would have to be a really good robot. And the only connection I have to really robotic things is when I use fully self-driving supervised. I guess you're supposed to add the word supervised fully self-driving to that term in my Tesla. And it's 99% perfect, but that 1% could kill you, right? So that's the problem. The robot might be 99% perfect, but that 1% could kill you. So, or one of your children or your dog. And so, they're going to have to work out safety protocols that are 100% safe before people widespread usage of those robots. But in factory settings, though, it's happening very quickly. That's one of the reasons why China is able to make these electric cars so cheaply. Is it's almost all done by robots now. Very few human. And so that really does help in some areas where a lot of repetitive manual work used to be needed is now not needed anymore.
Well, Isaac Asimov, the science fiction writer, had the robotic laws. Law number 1, a robot can't harm or kill a human. Number 2, through its inaction, it cannot allow a human to be harmed or killed. We'll need that.
Yeah, we'll need that. Well, there's a big debate between Anthropic and OpenAI with the U.S. government over military applications of using robotic drones, and what are the protocols in terms of AI controlling warfare, and how can they kill it? I mean, that right at the start of this Iran attack, they killed something like 130 people at a school because they're right next to the headquarters of the Revolutionary Guard headquarters, apparently. And so there's going to be challenges with safety protocols and people get killed, and then people get upset, or maybe people don't care. I don't know. As long as they don't get killed, maybe they don't care. I don't know. It's going to be very interesting. But I know one thing that's going to happen if they do use robots to run cars. There's going to be some deaths on the highways, and the robots or the automatic fully self-driving software is going to be blamed. And companies like Tesla and these other ones are going to have to pay out big settlements to the people who sue them for the wrongful deaths. So they've still got all of that ahead of us.
Tesla FSD 14.3, what is it? And is it a game changer for EVs?
So my Tesla, current Tesla is 2021, and when I first bought fully self-driving, I was promised that every upgrade, I would get every upgrade, right? So, but it turns out that was not true. So, what was that? What was that I heard? A promise is just a lie that hasn't happened yet. No. Anyway, so what happened was I got 2021. They said this hardware, which is basically the computers and the cameras and all that stuff, is good enough to take you fully self-driving. And then what happened was that was labeled hardware number 3, and then they came out with hardware number 4. So hardware number 4 is a level above. I think my wife's car, which is a 2024 Model 3, has a hardware 4. So that version that you mentioned in your question only works on hardware 4, and I've just got hardware 3. So what Tesla said was they were going to keep improving the software for hardware 3 at the same time as they're improving the software for hardware 4. But at the time when I heard that, I didn't believe it, and I haven't had any updates on my software for months now. Usually I used to get them one every month, but as soon as they started concentrating on hardware 4, we stopped getting updates on our hardware 3 cars. So that is the latest version of the fully self-driving. They're trying to get it approved in the U.S. and Europe. There are cars running in Texas, I guess, and I don't know about California, that are supposedly fully self-driving, but they do have human monitors that can watch over them, if not located in the car, located at a central location and watching the progress of the car, and can intervene if needed. So we're quite a ways away from Elon Musk would tell you that that's fully self-driving today, but it is probably not. We probably need several more versions and perhaps several more years before we get to the final product.
Used vehicle wholesale prices are rising. Could this be a repeat indicator of 2020 when inflation took off?
It could be. One of the things that I have heard in the last week or two is that electric vehicle prices are soaring. The used electric vehicles prices are soaring because obviously the fuel cost is so much lower with electric. But when I went to, I needed to rent a car temporarily because of anyway, I had to rent a car temporarily and went to Hertz, and they had Hertz. I wanted an electric car. Hertz was one of the few that actually had electric cars. And they had Teslas, and there were several of them sitting there. I said, I can't believe with the gas prices having gone up as much as they have that any of these cars are not rented out. And he said, well, yeah, they're pretty much in demand. He said, usually we run out of them, but for some reason they had a bunch in the lot there. So it was not hard to get one. But yeah, I don't know. I have heard though that new car inventories are at record high levels. I just heard that today. So that's a sign, and automobile manufacturers and house builders also are the stock prices of those companies have come down quite a bit, and so it indicates that the consumer is strapped for money, and maybe that's why used car inventories used car sales have gone up, because people are switching from new car to the used car. But I don't know. It's hard to tell. I think that that thing with the used cars was more a function of supply chain interruptions, where you just couldn't. You could go to the dealer and say, "Oh yeah, we'll get you that car that you want in brand new in 9 months from now," or "We got a used car here, right here." That's why I think that was in COVID times, and the supply chains were all blocked. But it's hard to tell on just one indicator. You can't go by that.
Where can our listeners follow you and buy your book?
So any of the top bookstores or the people that sell ebooks, either in the Amazon chain with Kindle or in the other ones in Canada. But as far as keeping track of me, I am on X, formerly Twitter, under HMACBE, and I tweet almost every day something interesting that I see, and then on Fridays we bring out our weekend note. And you can also sign up by going to that website, MacBeth.McLeodPartners.com, to get on the mailing list, the email mailing list for the weekend note, which talks about stuff like you and I have been talking about the last little while here.
Hilliard, thank you so much for being on This Week in Money.
Thanks, Jim.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. And that wraps up our show for this week. We'd like to thank our guests, Victor Adair, Josef Schachter, John Rubino, and Hilliard MacBeth. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@housestreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen.